Picture this. It's late November, and you just had your year-end tax planning meeting with your accountant. And here are your action items. Pay off all of your 2024 bills, buy equipment, max out your 401k or your defined benefit plan, and finally, go buy a truck or an RV so you can fully depreciate it. Does that sound familiar? This is the tax plan that most accountants are offering high-income business owners. But here's the problem. It doesn't actually work for you at your level. That advice could be good advice for a middle-class American, a W-2 person, a small business owner that isn't profiting very much, doesn't have large tax bills, that's focused on minimal gains, doesn't have high aspirations. But for you, someone with big aspirations, someone that wants to create millions and millions of dollars, someone that wants to build a business that's worth selling, that's attractive, it's reactionary, that's probably the only meeting you had this year. And if you had another meeting earlier in the year, it probably sounded just like this one. Did you notice the pattern? It's all about spending money. Spending money, spending a dollar to save 37 cents. This approach gives you the illusion that you're saving taxes or being efficient in your tax saving, when in reality, you've created a lot of inefficiency and or are just delaying the inevitable. The thing that I don't like around most accountants' tax strategies and tax plan is that they love and make the crown jewel of their plan the qualified plan, the defined benefit plan, the SEP, the 401k. That becomes their crown jewel. It's all that they can focus on. But if you're planning right, you should have more money in the future, not less. And the only way that qualified plans truly work at helping you save taxes is if you have less money in the future. But if you have an abundant, ambitious mindset and driven personality, you're at odds with that strategy. Someone with an abundant mindset cannot use a strategy that only works if you're shrinking. And unfortunately, that's how qualified plans work. They delay your taxes. You don't pay taxes today. When you put the money there, your tax bill goes down. So it makes you believe inside, yes, this is actually working. But the reality is there's going to be a reckoning. It's coming. Whether you want it to come or not, it's coming. So once you start realizing that that's not actually a tax strategy, it could be a retirement saving strategy if that's how you want to save for a future event and to pull and grow your assets inside of that vehicle, then maybe that's a different discussion. But most accountants are using it for a fake tax strategy, a means to help you save taxes today without acknowledging the future. And unfortunately, that's not best for high-income business owners like yourself. Middle-class accountants look just like this. It's usually just one person. They're extremely reactive. They only meet with you a few times a year, and they give you the advice that was given at this earlier section. If you choose to live in this world as a business owner, if you choose to embrace this level of tax planning, you are choosing to pay more taxes than you need to on an annual basis. You know what this boils down to? People that operate, accountants operate in this framework, they're telling you, yeah, I can save you money, which is true because you will save money on taxes, but you bought things you didn't want. You purchased stuff you didn't need. You just did it for the purpose of saving taxes, and you stuck a whole bunch of money into a plan that delayed your taxes but didn't eliminate them. But most often, that strategy, that framework comes from this mindset. I want to save taxes because I want to save money. I want to save taxes because I want to save taxes. There's no rhyme or reason for the saving of taxes. You're just doing it because everyone else is telling you that you're paying too much. Because everyone else is doing it, that's why you're doing it. But if we're truly going to shift away from that middle-class, owner-operator, inefficient tax planning environment, we actually have to embrace a new mindset. A mindset that tells us that we're saving taxes to build wealth. We're saving taxes to build wealth. That is the first thing that you must embrace if you're going to shift away from a middle-class environment to the environment of where you're actually playing, to be in alignment with that amount of wealth that you actually are bringing in, with the amount of money that enters your bank account. The second thing you need to embrace is you need to shift away from, I just have one accountant, to, I have a tax team. I have an accountant, tax attorneys, tax specialists, registered investment advisors, tax smart insurance advisors, private placement life insurance specialists, and just tax specialists in general. These people are creating my plan, not one person. Third, if you have the team, if you embrace the mindset of, I am saving taxes to build wealth, it's still not enough. Because if you reactively plan like most accountants do currently, most of the middle-class accountants, most of your accountants are probably doing this, where you meet sometime in November, December, and they tell you and give you this checklist of items that's super inefficient. That doesn't work. You have to proactively plan every single quarter. What is my tax bill? How can I reduce it? What strategies we're implementing? How much money do I need to save to buy the assets that I need to purchase so they can make this move, so they can save the taxes? And now everything changes because you've chosen to embrace the mindset of saving taxes to build wealth. You've chosen to have a tax team instead of a tax person, and you've chosen to be proactive instead of reactive. Those three things will change your entire tax world. And that's how you should be behaving, and that's how you should be planning. Not once or twice your tax strategies about maxing out your 401k and spending money on stuff you don't need and buying equipment you're never going to use again, or buying a truck or an RV. That's the environment we have to embrace, and that's the environment we have to shun. Too many successful business owners embrace the owner-operator, the middle-class accounting situation, and year after year after year after year after year, they pay more taxes than they need to. And it costs them millions of dollars. And the problem is they don't even feel a thing. To wrap it up, if you just met with your accountant, right now it's November 2024, but if you're listening to this a year from now, 20 years from now, and your accountant gives you this list of things, pay all your bills in 2024, go buy all the equipment that you could purchase, max out your qualified plan, your SEP, your 401k, your defined benefit plan, go buy a truck, go buy an RV so it can fully depreciate it. If that's the extent of the plan, you know that you have an accountant that's not servicing you and your needs as a successful business owner who has ambitions to go through the moon, who has ambitions to leave a generational impact, who has ambitions to leave generational wealth. If that's your accountant, if that is the frame your accountant is living in, you are paying too much in taxes. But the amazing thing is you don't have to live in that world if you don't want to. You can shift completely away from it and instead focus on, I'm going to embrace the mentality of saving taxes to build wealth. I'm going to build a tax team around me that is coordinated and collaborated, and we're going to proactively plan together. That's the shift that you need to make for the level that you're playing at, for the amount of money that you're making. I'm Justin Maxwell. Until next time.